Yo homies, what is going on? It is your boy Maleki here, the growth and dividend growth investor. Today I have a very interesting video to talk to you guys about. In today's video that I want to share with you, I will be discussing on how to build wealth. In the investing community, there's two very prominent styles to building wealth. There's growth investing and there's dividend growth investing. So there's these two styles that I've noticed are at the forefront of what people like to invest in. Just to kind of quickly give like the one-liner for each investing strategy. In the growth investing strategy over here, the main premise is you have a company, and what this company do is they want to grow their revenue, and the way the shareholder gets rewarded is by the share price increasing. So instead of dividend growth investing, where companies pay out a dividend to the shareholders, for growth companies prefer to actually not pay a dividend and take that money they would have paid the dividend, reinvest it back in the company, and then the shareholder could be rewarded by the share price increasing. Whereas on the other side over here in the dividend growth investing, these usually bigger companies who have really good cash flows, they pay out their extra profits and dividends, and basically what they do is they reward the shareholder for holding on to the stocks. So these are the two prominent investing strategies, investing styles that a lot of people tend to use. Regardless of whatever style you use, there are three key fundamentals to building wealth. The first is time in the market. Regardless of how much money you put in, if you don't have time on your side, your money doesn't have enough time to compound. The more time you have your money compound, the more it'll grow. There's two good times to plant a tree. One is 20 years ago, the other is today. The earlier you start, the better your investments are going to turn out. So that's the first thing. Time in the market is the most important thing. Now, if you don't have time in the market, what you need to consistently be putting money into growing your wealth. How do you do this? What you need to do is, what I've noticed in building wealth over time, the second key factor is to be consistently putting money away. If you're not putting money away into your accounts for it to grow, you're not going to grow wealth. You're just going to be broke just like everybody else. So you need to be putting money aside, whether it's $25 a week, $125 a week, $1,000 a week. It depends on whatever your situation is, but you really need to be putting money away. The amount of money influences how much wealth you have. The amount of time influences how much wealth you have. The more time and the more money you have invested, the more wealth you're going to have. If you don't have time, you better have money. If you don't have money, you better have time. If you optimize both of these, then you're going to build an extreme nest egg as you get older. So those are two strategies. The final key fundamental to investing is picking great companies. This is such an understatement because people are trying to invest in Nikola. So people are just trying to find the next best thing. And in the end, you want to find companies that are increasing their cash flows. If they're not increasing their cash flows and making great products and making money, it's probably not a good company. So you have to invest in solid companies. So those are my three key fundamentals to building wealth. What I would like to do is I would like to share my portfolio with you guys now to show you that I am practicing what I preach. Basically, just like I was saying earlier, I like to practice what I preach. So what I would like to do is I would like to share my portfolio with you guys. In my high growth portfolio, the one that was on the right side of the screen, or excuse me, your left, I have $56,768. So that is the amount of money that I have, whether it's invested or it's compounded. So that is my total gain. Currently right now in this portfolio, if any of you have seen any of my other videos, I used to have this stock called Alteryx in there. I did get rid of it. I just wanted to focus more on having investments in Tesla, ARK, and QQQ. And if you look at my allocations to each one, the QQQ is overweight. My goal is 33%. ARK is underweight and Tesla is underweight because they're both at about 30%. And I need Tesla to be at 34% and I need ARK to be at 33%. So basically, these are my holdings. What I want to show you guys is the activity that I have been doing on this. So just like I was telling you, there's three fundamentals to building wealth. The first is time in the market. Two is consistently investing. And the third is picking great companies. I believe I picked three really good holdings in this portfolio. Just kind of talking onto that second key fundamental is the amount that I'm investing. So like I was telling you, one of the keys to building wealth is to be investing and investing consistently. So if you guys see here, August 3rd, I deposited $125. On July 31st, I deposited $783. So basically I had some money left over after I got paid. So I'm like, you know what? All my expenses are paid pretty much besides my mortgage. And what I do with this extra money is I like to invest it into the stock market. And then we actually got a dividend here. And then again, just $125 deposited. I deposited $2,000 just because I had a lot of money in my savings account. So I just wanted to add a little extra money in there. And again, just when I can't put any extra money, I at least put in $125 a week. So that's about $500 a month. And you can see that I'm consistently adding deposits of at least $125 every single week. So I'm hitting key fundamental number 2. Key fundamental number 1 is time in the market. I have been investing for 2 years now, and I mean, I can't change that. In the past, I used to mess around with penny stocks and things like that. I don't mess with that. I just focus on high quality companies, and I invest in companies that make money. I used to invest in penny stocks, and I don't know what I was looking at thinking I was going to get rich quick. It is not a way to build wealth. That is a quick way to lose money. So had I known what I know now at 26 that I did when I was 22, I would have been in a much better situation. So I've been long-term investing for about 2 years now. Okay, so this is my activity for my growth portfolio. I just want to show you how my overall portfolio is doing. So I hold 3 positions. My cost basis is $32,823. So that's the amount of money I put in. And my total value is $56,768. My unrealized gain is $23,944. So basically, I invested at $32,000, and if I sold all my assets right now, I would have made $23,000, which is a decent chunk of money. So my total gain in this portfolio is 72%. So I've been investing for 2 years now, so it's about 35% a year annualized. So that is that. So I just want to show you guys that this is my portfolio, and I am practicing what I preach. So time in the market, picking good companies, and then consistently investing, putting money in, and then investing over time. Now let's switch over to my dividend growth portfolio. So I'm not going to go into the weeds explaining my dividend growth portfolio or necessarily the strategy. That's something you guys can look up. But total invested is $13,813. My earned dividends is $236.04. When I just press on my Roth IRA, you can see how my sectors are doing. So it seems like my sectors are doing pretty well. I don't really have any red. I did load a decent chunk of change when the market was down into this Roth IRA. Once I maxed out that $6K, I couldn't put any more money in, because I would, if I could put more money in this account, I would, but unfortunately I don't. So just want to show you guys how my gains are doing. And then basically I just want to show you guys the biggest winners and losers. So the biggest winner in my portfolio is NVIDIA, 52% gain. Then Cintas and Apple are killing it as well. And I have Wheaton Precious Metals that's also doing really well. So these are my companies that are doing very, very well. Now, with companies that do good, there's also companies that do bad. So let's just take a look at my biggest losers so far. Intel is dropping the ball here, but Intel is still a huge company, and they make a lot of money. So I believe they will recover. Brookfield Renewable, Avalon Bay. So these are really good companies that I feel will bounce back. Even ExxonMobil. I'm not huge into investing in energy. This is one of the few energy holdings that I do have, but I do. ExxonMobil will bounce back, knowing that even though I'm investing in Tesla and I'm very bullish on electric vehicles, I still believe that in the interim, we're still going to require gas to fuel our vehicles. So these are my gains. Basically, I can go over every single dividend that was paid out in the month of July. I don't feel like boring you guys to death. So what I did instead is I created this monthly dividend income line chart. And what I do every single month, whatever dividends are paid out, I just add them up together and I just plot them on this chart. The biggest dividend month was in March, and that's part of the Q1 quarterly payments. And then the other time that was paid out was June, which is probably Q2 payments. And if you guys see on this chart that, the March one was obviously much bigger than the June one. But what I would like to see in this, in my dividend portfolio, is I don't care too much about the share price appreciation. What I do care about is the dividend income increasing over time. That is the most important thing that I am looking for. So right now, if I average this out, I'd probably be making about like $15 a month in dividend income. There's still a lot of room to grow. Like, I only have $12,000 totally invested. Every single January 1st, I'm going to put the $6,000 in there just so that I can get that dividend income as fast as possible, and I can get those ex-dividend dates, so then I can increase the cash flow I'm getting. So my plan is, for example, in March 2020 is 51.72. In March 2021, I better see this be like $60 or $75, some sort of increase. Same thing with this $45 in July or June. If it's $45.88 in June 2020, well then June 2021, I better see this at $50 or $60 or $65. So I better be seeing increase over time, and I want to see that line graph over time go up. Yes, it's going to have some up and downs because some quarters will be less, if not, some quarters will be less than other quarters, but like for the same month every single year, I better see an increase. So I want to see that passive income increase over time. So just want to show you guys this monthly dividend income Excel sheet or Google document that I did. So just kind of similar with that growth account that I have. In my Roth IRA, I do have the Dividend Growth Investing style strategy in this one. And the reason why I want to do that is because of the tax advantages associated with the Roth IRA. With that Roth IRA, any share price appreciation or even any dividends paid out does not get taxed when you do get to retire. So at 59.5, if I'm making like $4,000 a month, that is $4,000 a month that is not taxed. So just kind of similar to that first portfolio, I want to be time in the market, which again, I've only been investing in this account for 2 years as well. So there's not really much I can do for time, but like the only thing I could do is start, which I already have. So I started this, I want to max it out. So the maxing out will be number 2, which is consistently invest. As long as you max this out, you'll be fine. So that's what I'm doing. I'm maxing this out. And the third thing is picking great companies. If you saw my REIT video a couple days ago, in that video I talk about like different things that I look for REITs, different valuations, and that's kind of very similar to what I've been looking for in companies for the dividend income. So market cap, dividend, share price appreciation, financials, dividend history, and then their comparison to a peer. So that's kind of things I look for. So guys, I really appreciate you guys watching this video. If you liked it or enjoyed it or learned anything, please like, comment, and subscribe. It really means a lot to me. And you guys have a great day.